there's a 100% correlation, negative correlation between the dollar and gold. A strong dollar takes gold down, and the reciprocal, a weak dollar, supports and takes gold up. We're looking at a chart. It is set in terms of the time element. Each candle here represents 1 week. And you can see that back at the beginning of this year, my pointer is on January 13th and January 6th. The dollar index was at 109. And over the course of just a couple of months, we've seen it go from 109 and touch an intraday low of 97.67, currently back to about 99.09. And that was a major support level, technically speaking. Really interesting times in gold. We've seen a all-time record high above 3,500 in June futures. That's history. That's a milestone that was made just last week.
Gold has extended its winning streak into 2025, marking 4 consecutive months of gains as April ends with the metal reaching yet another milestone. This steady ascent underscores what is already shaping to be a standout year for gold. The year began with a substantial 6.26% gain in January, followed by a modest 1.25% rise in February. March brought the most significant surge, with prices jumping 8.97% to reach $3,157. Altogether, gold has climbed roughly 18%, or $600 per troy ounce, since the start of the year. After hitting a record high above $3,509, the June futures contract entered a tighter trading range during the last week of April. Gold's upward momentum has been closely tied to a weakening U.S. dollar, which has come under pressure from government trade policies, including introducing new import tariffs. The dollar index peaked above 109 in mid-January and has since fallen to 99.435, despite a slight rebound of 0.32% today. Gary Wagner, editor of thegoldforecast.com, analyzes this parabolic rally, highlighting $3,300 as a key support level where traders are consistently buying on dips. Wagner discusses how this move compares to past bull runs, notes that dollar weakness is only part of the story, and suggests that the current consolidation could be laying the groundwork for gold's next major leg higher. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Yeah, we'll start with the dollar very quickly and then go into gold. Of course, there's a 100% correlation, negative correlation between the dollar and gold. A strong dollar takes gold down, and the reciprocal, a weak dollar, supports and takes gold up. We're looking at a chart. It is set in terms of the time element. Each candle here represents 1 week. And you can see that back at the beginning of this year, my pointer is on January 13th and January 6th. The dollar index was at 109. And over the course of just a couple of months, we've seen it go from 109 and touch an intraday low of 97.67, currently back to about 99.09. And that was a major support level, technically speaking, and that's because of these two bottoms. The first one, second day of January 24. The second bottom occurred on Monday, the 9th September 24. So these two bottoms acted as a level that we felt should be technical support. We did barrel through that. However, we came right back up, and right now I went from major support being broken to major support being challenged, because we are right in this area, and it's a little too early to tell if the dollar itself will consolidate in this area and maybe pop back up because it's had such a dynamic fall from grace, or continue lower. If the dollar continues lower, 96.90 is going to be the next level of technical support, and it is based on this set of lows that came in 2023, the 10th of July.
Wow, well, that's wild.
Move down, 109 to 108 represents a 1% devaluation in the dollar index. So it has lost roughly 9 to 10% in value. And that 10% of loss goes directly into a 10% gain in gold. The other end of the formula, so to speak, is whether or not market participants are actively buying or selling. And what we noticed last week is even with some remarkable moves in gold, they were predominantly dollar-based, meaning it had less to do with the activity of market participants and more to do with the dollar trending lower. And if I go ahead and really blow that up, so this little red line here represents this week. And of course, we're midweek, but look at the low that the dollar hit last week. So it opens last week at 99.45, trades as low as 97.77, and is currently back up to 99.25. So even though we've seen a tremendous range, the differential last week between the open on Monday and the close on Friday was really restrictive, 99.36 to 99. So 0.25%, very, very small move in terms of the net change. Right. And the way that that relates to gold, of course, is the series of rallies that we have seen over the last year, year and a half. This goes back to October 2023. That's where my pointer is. If my pointer's showing up on screen, the crosshairs are. But you had gold at 2,000, and it ran from 2,000 in a fairly short period of time. In other words, a net gain of $554 in 134 bars. And this, of course, is a daily chart. The rally that we had in June 2024 began at 2,450, I'll round up, and concluded at 2,900. So in terms of the net result, it gained 18%, but that was $455. The first rally was $554, a 27% move, and realizes gold gets more valued, higher in price. The dollar amount might go up, but the percentages are going to get diluted. So when we look at a 33.29% gain, which is from the middle of December last year up to just recently, it's a 33% gain over 86 bars, and this is so 86 trading days, but a net gain of $878. But I draw your attention to this white box here, which gives you the angle that we're looking at. So this is a 32% angle, and I'm simply measuring. We have seen gold gain more value in a shorter period of time relative to the other rallies that occurred as recently as middle of last year and the end of 2023 up to about April of last year. And that is significant. You can see how strong that gain is and compare it to other rallies. The performance has been stellar. Percent of this 33% gain, as we said, about 10% of that gain is directly attributable to dollar weakness. So that means that 20% of the 30% move had to do with market participants extremely active beginning in the middle of December to the all-time record peak. And this is based on a closing price. Of course, it would be much higher if we looked at that intraday high that breaks above 3,500, currently at $3,315.
Since 2007, major global currencies have experienced a dramatic decline in purchasing power compared to gold, with losses ranging from around 70% to as much as 87%. Over the same period, gold has risen significantly, gaining between 238% and 651%, depending on the currency. Historically, gold has been a reliable store of value for thousands of years. Although it lost prominence in the late 20th century, its role is being reassessed amid growing concerns about the stability of paper-based monetary systems. Rising inflation and financial volatility have pushed more individuals and institutions to seek refuge in gold, contributing to a sharp increase in value over the past 5 years. Do you think gold is a better long-term store of value than your national currency? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.